Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm AlgoBot, and today we're studying a price structure reversal approach called the Quasimodo Pattern Swing Reversal. This expert advisor watches how swing highs and swing lows form, looks for a specific shift in market structure, and then waits patiently for price to retrace to a key level before it acts. By the end of this video, you'll understand how it maps out the pattern, how it uses the average true range to size its stop and target, and how the whole thing comes together in the code. Remember, this is educational information only, not financial advice. Let's dig in. So what exactly does this expert advisor do? At its heart, the Quasimodo Pattern Swing Reversal is a structure-based reversal strategy. Instead of leaning on a momentum oscillator or a moving average crossover, it reads the raw shape of price itself. It hunts for a well-known reversal formation that many discretionary traders call the Quasimodo, or sometimes the over and under pattern. It's a close cousin of the classic head and shoulders idea, but with a twist in how the entry is defined. The strategy runs on a single time frame, so whatever chart you attach it to is the charted analyses. Every high, low, and close it reads comes from that one time frame. Because the logic is purely structural, it isn't tied to any one market. It can be studied on foreign exchange pairs, on indices, on metals, or on other instruments, as long as they produce clean, trending swings for the pattern to form within. The engine driving it is a combination of two simple building blocks. First, it uses 5-bar fractals to identify meaningful swing highs and swing lows. A fractal high is a bar whose high stands above the two bars on either side of it, and a fractal low is the mirror image. Second, it uses the average true range, a standard measure of volatility, to decide how far away to place the protective stop and how far out to set the profit target. That keeps the stop and target proportional to how much the market is actually moving at the time. Who is this style suited to? It leans toward the patient, swing-minded trader who prefers waiting for a defined setup rather than trading constantly. The pattern doesn't appear on every bar, and the expert advisor only holds one position at a time, so it's selective by design. As always, trading carries real risk. Losses are a normal part of the process, and nothing here is a promise of any particular outcome. This is an educational walkthrough of how the logic is built. Let's walk through the exact logic step by step. On each newly formed bar, the expert advisor appends the last closed bar to a rolling window of recent price data, then scans backward through that window. The number of bars it looks across is controlled by the SwingScan input, which defaults to 50. Within that range, it searches for the two most recent swing highs and the two most recent swing lows, each confirmed by the 5-bar fractal rule. Consider the bearish version first. The strategy labels the newer of the two swing highs as the head and the older one as the left shoulder. For a valid bearish Quasimodo, the head must sit higher than the shoulder. The strategy then finds the lowest low between the shoulder and the head and checks whether price has since closed below that level. That closing break is what we call a break of structure, and it's the signal that the prior up move has likely failed. Once the structure has broken, the expert advisor watches for price to retrace back up toward the left shoulder high. This is the unmitigated supply level. When the current bar reaches up to that shoulder, within a small tolerance set by the tag ATR fraction, and then closes back below it, the short entry condition is met. The stop loss is placed above the head, at a distance of half an average true range beyond it, and the take profit is set 2.5 average true ranges below the entry. The bullish version is a clean mirror image. Here the newer swing low is the head and the older swing low is the shoulder, and the head must sit lower than the shoulder. The strategy finds the highest high between them, waits for a close above that level to confirm the break of structure, and then watches for price to retrace down to the shoulder low. When the current bar dips to the shoulder and closes back above it, the long entry condition is met. The stop loss goes half an average true range below the head, and the take profit is placed 2.5 average true ranges above the entry. A couple of guard conditions keep things orderly. The expert advisor only evaluates once per newly formed bar, and it will not open a new position while one is already active under its own magic number. It also confirms the stop sits on the correct side of the current price before sending anything. The average true range period, the stop multiple, the target multiple, and the order volume are all adjustable inputs. Let's read through the meta-editor code on screen. At the top are the inputs. SwingScan of 50 sets how far back it looks for swings. Tag ATR fraction of 0.2 is the tolerance for tagging the shoulder level. The ATR period is 14. The stop multiple is half an ATR. The target multiple is 2.5, and the order volume defaults to 10/100ths of a lot. Now the sell block, the bearish Quasimodo. It first confirms two swing highs exist and that the head sits above the shoulder. It scans for the lowest low between them, then checks whether any later close drop below that mid-low. That's the break of structure flag. The tag condition asks whether the current bar reached the shoulder high within tolerance and then closed back below it. When both the break and the tag are true, it reads the bid, sets the stop half an ATR above the head, confirms the stop sits above price, and calls enter with the target 2.5 ATRs below. The buy block is the mirror. It confirms two swing lows with the head below the shoulder, finds the highest high between them, and looks for a later close above that level. The tag condition checks that the current bar dipped to the shoulder low and closed back above it. When confirmed, it reads the ask, sets the stop half an ATR below the head, and targets 2.5 ATRs above. At the bottom, the enter helper routes a long to trade.buy and a short to trade.sell. Let's walk through this illustration candle by candle, because it shows both a long and a short unfold in sequence. Notice there is no oscillator panel here. This strategy reads pure price structure, so the two dashed horizontal lines mark the levels that matter, the left shoulder low in green and the left shoulder high in red. We begin with the bullish Quasimodo. The first candle drops and carves out a swing low that rests right on the green shoulder line. Price bounces on the second candle, giving us that left shoulder low as the older of two swing lows. Then, on the third candle, price falls again and prints a fresh low, dipping beneath the shoulder. This deeper low becomes the head of the pattern, sitting below the shoulder exactly as the bullish logic requires. Now watch the fourth candle. Price surges upward with a strong rally and closes above the highest point between the shoulder and the head. That close is the break of structure, and it tells the expert advisor the down move has likely exhausted itself. The strategy does not chase that rally. Instead, it waits. On the next candle, price retraces gently back down toward the green shoulder line, tags it within tolerance, and closes back above it. That is where the buy entry marker appears. The protective stop sits just below the head, shown by the stop marker beneath the pattern, so the risk is defined the moment the trade opens. From there, price turns higher again, climbing over the following candles until it reaches the take profit marker, placed 2.5 average true ranges above the entry. The long idea has played out. Break of structure, patient retrace, entry at the shoulder, and a run to target. Now the market rolls over into the bearish Quasimodo, the mirror image. Price pushes up and forms a swing high that rests on the red shoulder line. That is our left shoulder high, the older of two swing highs. Price pulls back a little, then drives up again and prints a higher high, and this taller peak becomes the head of the bearish pattern, sitting above the shoulder as the logic demands. Watch what happens next. Price drops sharply and closes below the low between the shoulder and the head. That downward close is the bearish break of structure, warning that the up move has likely failed. Again, the strategy stays patient. Price drifts back up, retraces to the red shoulder line, tags it within tolerance, and closes back below it. That is where the sell entry marker appears. The stop is parked just above the head, shown by the upper stop marker, keeping the risk contained. From there, price falls away, sliding lower over the next candles until it meets the take profit marker, set 2.5 average true ranges below the entry. So across this single illustration, you've seen the full symmetry of the approach. On the long, a lower head, a break of structure to the upside, a retrace to the shoulder, and a move to target. On the short, a higher head, a break of structure to the downside, a retrace to the shoulder, and a move to target. In both cases, the entry is taken at a level the market has already left behind. The stop lives beyond the head, and the target scales with volatility through the average true range. Of course, not every setup resolves this cleanly. In real markets, price can tag the shoulder and simply carry on, which is why the stop matters and why losses are a normal part of trading this way. And that brings us to the end of our look at the Quasimodo Pattern Swing Reversal. We covered how it identifies swing highs and lows with 5-bar fractals, how it confirms a break of structure, how it waits for the retrace to the unmitigated shoulder level before entering, and how it uses the average true range to place the stop beyond the head and set a target 2.5 ranges away. We also read through the buy and sell blocks in the code and watched both trades unfold on the chart. Please remember that everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading involves real risk and losses do occur. If you found this helpful, give the video a like, subscribe for more MetaTrader 5 strategy analyses, and drop a comment with the strategy you'd like us to break down next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.